The Federal Reserve is hosting a major conference on bank regulation today in Washington. We'll be hearing from the Fed's Michelle Bowman in her first CNBC interview in the next hour about all of this. Right now, though, we're joined by Mike Mayo. He's a banking analyst with Wells Fargo, who's also attending and actually going to be speaking at this conference. And Mike, if I hear this, the evolution of the capital framework is your panel. This is the integrated review of the capital framework for large banks conference. That sounds like a giant dose of ambience, but you think that this is the biggest inflection point for the bank in decades. Explain.
Yeah, I think this is a big regulatory reset. I think this is the most positive change in bank regulation in 3 decades. And this is the first time there's been an event like this at the Fed. It has regulators, ex-regulators, academics, and investors like myself. And everybody agrees to keep banks safe and sound. But having said that, I think the goal is to cut as much bureaucracy and red tape as possible. So here's my visual, Becky. This is the goal. Cut the red tape. And it's not always as easy as you think it is. But once they do that, then banks can be a lot more efficient, and hopefully they have more capacity to make more loans. The Treasury Secretary was at a dinner last night with this whole group, along with the Fed chairman, and the goal still is to delever the public sector, relever the private sector using banks, which have been marginalized too much. So I think this is a very positive event. You're seeing the direction of travel when it comes to banks and changes after 15 years since regulations have been piled on since the global financial crisis. You know, thank you, regulators, for the first 5 years after the global financial crisis. They did a great job. But I think the 10 years since then, it's already mission accomplished and it's become too burdensome. And I think a healthy debate is what to expect for today.
All right. This is really interesting because we just spoke with Rohit Chopra, the former head of the CFPB, who thinks that the stablecoin, the Genius Act, is going to be a big problem because by soaking up funds that would have otherwise gone to the banks, by soaking up those funds, maybe taking them into treasuries, that's going to eat away at the bank's abilities to loan. You think this is something that will ease up and allow the banks to loan a lot more without putting us in a perilous position? Nobody wants to see a repeat of the financial crisis, but you're right. If there's too much regulatory red tape, it holds back the economy. It keeps the banks from lending what they could and should be doing to small businesses, to consumers and the like.
Yeah, in my view, there's no question that regulation now, the pendulum has swung too far, and it's too confusing, too constraining, and too costly. We did a proprietary survey at Wells Fargo in our equity research group, and 9 out of 10 investors find the capital rules too confusing. These are some of the most sophisticated investors around. And if they don't understand it, do you really think all the bank executives understand it? You think, especially the bank boards, you need to make regulation more understandable for it to be useful. And by the way, the next crisis is not going to be like the last crisis. So you need to have a more dynamic regulatory environment instead of simply repeating the global financial crisis scenario, year in and year out. Whatever's going to hurt the banks in the future, it's probably not going to be, mortgages or what we've seen in the past.
Well, what do you think it will be in the future? Only because Jamie Dimon has raised some issues about whether it's private credit. Where do you think the next potential buildups, the next potential bombs are in the financial system?
Well, a lot of people like to mention private credit, which has grown 5 to 10 times since the global financial crisis. And when I worked at the Fed 35 years ago here in Washington, D.C., the adage was, if it grows like a weed, maybe it is a weed. Now, private credit might not be a systemic risk, but there are a lot of concerns about the procyclicality of private credit. In a recession, are the private credit lenders really going to step up? Possibly not. So it could exacerbate a downturn. So I think that's the more possible risk.
Mike, on terms of the private credit piece of this, you questioned Jamie Dimon about his interest in being in the private credit business. How do you think about banks entering that space? How do you think about the leverage that does exist in it? So there are private credit funds that are duration matched, 10-year money in, 10-year loan out. That makes a lot of sense. But there's some that have added a whole component of leverage to that. And I don't know if we fully all understand, who effectively is on the hook when it's over, if the music stops.
Well, what is one area that's grown at the banks? One reason why I'm so bullish on the banks right now is because you've had 15 years of de-risking in the banks. Capital is about double. Liquid assets are about double. Banks have de-risked their customer base. But one area that has grown is the lending to the non-bank financials, such as private credit. I'll tell you, as an investor, I don't have enough data on that. I will say a lot of these loans are much more well secured, though. And there may be some regulatory arbitrage here. Instead of lending to the companies directly, they lend to the private credit firms where the loans are more secure. But I'd say we need more data on that.
Mike, we're out of time, but your first, second, and third stock picks, all the same name.
Well, as I said on your show last year, and I think you kind of rolled your eyes at the time, but it's Citigroup, Citigroup, Citigroup. Citigroup's restructuring. This is their 13th. The prior 12 failed. The 13th is going to be Citigroup's lucky number, and they're also a tariff beneficiary.
The stock up 43% for the 1 year, and I think it's up 31% year to date, so it is a very smart call.